Warriors. Hi, Patrick. Zig, how you doing? Who else is here today? All the Face Warriors, anyone I... Tillin, hi. You like our room? Let's see who else. Anyone else I've interviewed? Hi, KT. A lot of people, I see a lot of familiar names in here. Yeah, I was wondering about that too, Raj. Hello, everyone. Let's see who else is here that I know. Oh, Dennis Geekus. Dennis is here. Hi, Dennis. Let's see. Okay. So everyone that's been coming to Face knows I've been looking for a flush under 1300 in the gold for quite some time. You know, finally got it. 86 was my initial target. It's 61.8 back here. Everyone see that? So people are saying, Dale, should I reverse and go long? And I'm telling them that if you want to do it, you just go real small, and just so you have your toe in the water, and then wait for better RSI structure. The other thing that holds me back is I don't think the bottom's in silver. I still think we're going to take out this low. So I'm going to kind of key gold by silver getting to ballpark 1560, 1570. Okay, give me a Y if you're with me. So we did achieve this level, but just because, you know, I've talked about it before, and in fact, when I talked about the dollar index, when I was looking for 88.50, I was on with Larry Pesavento, which on TFNN, I'm going to be on with him after Face today. I said, you know, reaching a target isn't necessarily a reason to reverse, but that turned out to be, would have been a great reversal. So anyway, maybe gold will be here too. So we all know this is dollar, you know, is dollar sensitive, the metals, and was driven by something I talked about with Blake, that it would probably take another surge in the dollar for gold to break down. As you can see up here, we finally got to another weekly line. So a lot of my weekly lines are coming into play. Here's the Dixie right against it. And in fact, the 4 hour is diverging up here. The 1 hour is diverging, but still, you know, well, actually it looks pretty good because we didn't take out 70. So between here and 94, I think you have to lighten up on long dollar positions and be looking for a turn. Let's see, let me give you an example of something I was wrong about, because, you know, I'm wrong a lot. And so far it hasn't taken it out, 87.30, but I really thought this was going to be a continuation formation in EG, and we were going to head higher, and now I don't know what to do. I was thinking 70 to 60 would hold. Here we are retesting the lows. So that was a forecast that didn't work out. And someone's asking a pretty good question: why isn't the yen responding to dollar strength? That's a very good question. So it came off, but as long as we stay over this 110 area, this almost looks like just consolidation after a big move. You know, we worked off the extreme overbought position here. On the 1 hour, this is a confirmed high, maybe a little divergence, but I don't think it's done. Back under this double top would do it, though, would be your first warning sign, plus a 50-day moving average is coming in at the same price level. 10-year yield lower. Okay, there's a great answer by Amanda. And guys, if you don't know Amanda, she's a great trader, and you could follow her stuff. Yields have come down. The bonds are bouncing. Okay, they move counter trend, just like gold moves in the opposite direction. Amanda moderates the member chat room. So it's that in itself is a good reason to subscribe, because she makes a living, supports her family from her trading. She's very tough, and she's a patient person in the room. Don't give her a hard time, though, or you're in trouble. She's also tough. Kind and tough, great combination. But I believe that's a reason to, consider a subscription now, guys. At least, you're not going to be able to go into the room with the trial. So sign up so you could hang out with Amanda and Blake and Stelios and Steve are in there a lot. So, this is only an hour and a half here, an hour of analysis, and then a guest. I have Raksha Soni is going to be with us today. It'll be my first interview with her. Looking forward to it. And if you're questioning where you're trading and something isn't right for you, I encourage you to get a hold of Trent Hoare, or it's spelled with an H. I'm not sure if it's silent or not, at Forest Park FX. His contact information is there for you guys, and he knows almost every broker out there. Not all over the globe. Cyprus, UK, US. You don't have to have a big memory to know about every broker here in the US. There's not a lot, but he's an expert on all these different brokers, and he'll help you find a good fit and what you're looking for, whether it's spread, platform, whatever. So great guy. I've interviewed Trent, very knowledgeable in all areas of Forex trading and brokerage. So that's it. I'm on the lookout for a dollar turn. This to me looks like a 2. Maybe this is 1 confirmed high. This is 2 non-confirmation. Hey,
yeah. Hey, I'm sorry to interrupt you. Can you give me about 3 minutes, please?
Oh, sure, buddy. I can yabber. Okay. So this is 2. Maybe we get some type of pullback here, and then look for 3. And wouldn't it be a coinkydink if it happened here under the line? Right? So it comes in about 70-ish. Let's look at a couple of the individual currencies here. Also, yesterday I talked about risk off in S&Ps. That was pretty present. I know a lot of people. Blake had a Gartley on the NASDAQ. So now I'm conflicted for months. I've been waiting for a third drive to develop here. Maybe the Gartley's going to be the one. I told you about Jeff York looking for a right shoulder. So far, Jeff York's looking good. We'll see how deep it gets. I'm going to be patient and wait for my setup. Besides scalps, I still think there's a chance that we see 7,300 in the NASDAQ 100. That would be more classic for my work up here. But they do look vulnerable. It was mid-month. Blake has told you about May. I think yesterday was some type of lunar cycle, as well as a GAN day, according to Ronit. Ronit tweets me a lot. And the VIX looks like it, has a heartbeat trying to come out of here. So we'll see what happens with risk. There's a lot of flux now with North Korea threatening to cancel the summit. And I was hoping that the summit comes off and we get some kind of deal to set up a bottom in precious metals. Still could work out that way. And I think that's about it as far as. Are you ready? Ready, bro?
Yeah, I'm here. Yeah, sorry, I've got audio issues. So if any of you guys use Skype, Skype is it's such a great product, and it's such a piece of crap at the same time. The most difficult time. They upgraded it, so I've got like all sorts of audio issues.
Yeah, you know what? I avoided that. And we should tell everyone out here, don't upgrade Skype.
I didn't mean to. It just, you know, I
Yeah.
upgraded with my my Microsoft update, I think, and so it's thrown all my audio off completely. It's jacked up. So like, anyway, I don't want to bore you with the details, but it's crazy. Anyway, so as far as what's happening, the euro has obviously broken down, and broken in new lows. And this is it's all about Italy at the moment, and I you know the we have basically what would be what could end up looking like a another possible debt crisis. I mean, we got yields rallying. It's going to be tough for countries to service their debt. Italy and Europe, could end up being the epicenter of all of this, and that's what's really pushing right now is the euro. And it's not just the euro dollar, it's the euro against everything. I mean, you look at the euro dollar breaking lower. Now I've got this drawn out just because technically the euro should find some support around 117, and let me explain to you the reason why it should find some support. We have the big 38% retracement, we got horizontal support, we've got 161% extension of the last bounce that we saw a couple of days ago. But I don't necessarily think that is going to that's going to hold the euro, other than possibly a bounce. I think if I had to draw it out, it would look something like this, bounce, and then even go lower from there. So the euro is weak now. Like I said, it's not just the euro dollar, it's the euro against everything. So, and I don't want to take too much away from what Steve will probably talk about, but you got the euro yen that's rolling over. I mean, look at the euro yen, look at how heavy that's trading. And it looks sick. I mean, you get below this 129 level right here, and the euro could really buckle under some pressure, the euro yen anyway. You got the euro Aussie that's breaking down after we're in this little channel, but we're breaking through all the support through here. The euro New Zealand coming off that resistance, euro Canadian below the 200-day moving average. You've got the euro really under pressure. Now, one of the things that we've seen, and you and I talked about this the last couple of days, is the bond market pushing into new lows and quite possibly bouncing. I think the risk here is that the bond market starts to rally. I know yields are higher, but when you start talking about a flight to safety, the bond market could actually reverse. And remember, this is the biggest short position on record for the 10-year bond market. So you got bonds that are under pressure. They could completely reverse, especially if things in Europe continue to worsen, and we could see yields come back down as there's a flight to safety. Now, the one currency pair that is extremely sensitive to yields, and it doesn't even care about the stock market right now, is the dollar yen. Okay, the dollar yen, we rallied yesterday. I actually had a short in the dollar yen at 109. I think it's 109.57. I just put my stops above 110. I had a tracker. It's I tell everybody, like in our chat room, that like if I'm trading like something and I expect something to happen, I'll put in a tracker position, meaning that I'll establish a small position in the market, and then if it goes my direction, I'll start adding, but I usually put it on there just to keep track of it. And this is a perfect example of, I had a small position in the dollar yen. I got stopped out above 110. It didn't go where I thought it was going to go, so I just took the little position off the table, and just I'm continuing to monitor it. The thing about the dollar yen, though, that I have to point out here is that the stock market, or excuse me, the dollar yen is very responsive to yield. So as yields in the 10-year yesterday rallied above 3% or 3.05 or whatever it was, the dollar yen moved higher. There's a lot of people getting long the dollar yen. There's Citigroup put out a big trade yesterday that they're going long the dollar yen above 110. They doubled down on their position yesterday afternoon, which means a lot of people are looking at yields continuing to go higher. Now the risk here is if we break back below 110 and bonds rally. And by the way, if you're not watching yields right now at this moment in time, what is happening here is kind of what we're talking about. Yields are coming down. This is the 10-year yield. Yields are coming down, and we might have that flight to safety, if you will. And this is a mirror image basically of the dollar yen. I mean, if you want to see, how close this looks here, let's compare USD JPY. This is the 10-year yield, and this is the dollar yen. So when stocks were selling off yesterday, everybody's like, well, why isn't the dollar yen going down? Because the dollar yen is a yield story, not so much a bond story, not so much a stock market story. It can be a stock market story, especially if stocks continue to go down and yields rally.
Could be a gold story too.
Yeah, but and by the way, great call on gold, Dale. But before people get too bearish, and this is the thing I want to point out about here. I had it already.
To the number. I had a weekly line at 1286 is 61.8 back on it.
Yeah. So this is really really key support here. We're below the 200-day moving average. A lot of people probably sold their gold. As this is 2018 lows basically. I mean, you think about like what we've done all year. We've basically done that, and so you broke down below that that support. You get everybody. Hold on, really fast. Man, this euro yen is going to come unglued. I think the dollar yen is going to break back below 110 here. Excuse me, really fast.
Screw Citibank.
Well, yeah, I mean, well, they're as Chi in our chat room likes to say, I tend to fade them, and look, it made sense yesterday. It may not make so much sense today. Again, what's happening in Europe and what's emerging in Europe is. It's developing is people are starting to get concerned about the debt issuance. The guys in my office were talking about the debt levels are 40% higher now than where they were at when the financial crisis started. Think about that. What was the cause of the financial crisis? It was a funding issue, and that was the root of the issue here.
So last time, Blake, it was housing, mortgages, and a lot of the derivatives. This time it's sovereign. It's governments now. Marty Armstrong talked about this a few years ago. He's looking for a sovereign debt crisis, and looks like we see the beginnings of it here, huh, bro? I mean, look at how much more money you're talking about, the increase of debt. So say even shorter term paper that we have to roll over, the cost has doubled to do that in the last 6 months.
Right, exactly. So you think about like how's that affect countries that can't service their debt? This is this could be a really big issue, and the guys in my office in Connecticut are like, this could be the first inning of a 9-inning baseball game. This could be something that really develops into something much bigger. So we have to, be very, very careful here, especially as bond yields continue to rally. I've got everybody and their brother's mother's uncle right here talking about the 30-year bond market. Here's Here's the ZBs. Okay. Actually, let's go to the yields. Here's the yields. You know, with yields on long-term debt looking the way they look, I mean, I think things could get rather ugly here. Wow, I think the euro yen's hitting new lows actually. Yeah, the euro yen's approaching lows. I'll tell you what, if this euro yen breaks 129, it's all over but the crying. It really is. And I think if the dollar yen breaks below 110, then you're going to see a lot of stops start to get triggered here.
Stelios and I'll cry, Blake. You know, we're pretty emotional guys, you know.
You guys are emotional guys. A bunch of sappy sob stories in there. I need to send you to the Marine Corps boot camp.
Don't hurt my feelings.
I tell you. A couple other key levels I think we should look out for. You know, the pound is performing better than the euro right now because of the euro pound, but also keep in mind that the pound still has a big double top here, and we're at a 38% retracement, or getting close to. So if the pound breaks below this 134.40 level, that it could trigger some stops there. Aussie continues to trade relatively heavy, but you know, not really doing much with the Aussie, the Kiwi as well. Matter of fact, JP Morgan, one of the analysts from JP Morgan sent out a big note last night at, you know, in Asian trade. It says, hey, you know, just keep in mind that, you know, the Kiwi dollar range is between, you know, 85 cents and 40 cents for the last, you know, 30 years or whatever. And you can see, we can only see back to 1994, but he's like, man, there's a lot of downside here, and with the Aussie as well, you know, a big range. There's a lot of downside, so don't get, you know, don't get, you know, too terribly worried that we're at the low end of the range. The you know, the Aussie's got a long way to drop if it continues to drop, and it does look relatively heavy. And remember, if we have like this, you know, if we have like another debt crisis, the flight to safety is going to be the dollar and probably the yen and bonds, and maybe gold, which, you know, those are the, you know, the usual suspects in light of, you know, you know, risk aversion type of situation. And you know, and I have to say, you know, you look at the stock markets. The stock markets have had a nice rally. We're in the month of May. We're at a, you know, time where typically, you know, the market could be a little heavier than normal, and so you know, you got, you know, especially after these nice rallies off the lows, you got the S&P. Here's the Dow. Here's the Nasdaq. Nasdaq showed a nice reversal yesterday as we were talking about this this big Gartley pattern. So I wouldn't be surprised if we see a little bit of you know, risk aversion, and I think it's being led by the euro and what's happening in Italy. It's big news. When I got up this morning, I was like, oh, did the Eurozone CPI come in weaker than expected? And that wasn't the case. It's really, you know, what's happening in the Italian government, and you know, is Italy going to be able to, you know, service its debt? And I think the market is starting to get a little concerned about that particular situation. So, but anyway, just taking you over to a couple more pairs before Steve gets here. The dollar Swiss, remember, it's actually holding up pretty well. I've been hoping for a pullback in the dollar Swiss, but and heck, I mean, if the market gets a little risk averse, maybe the Swiss franc emerges as one of the better currencies to own, despite the borrowing costs. U.S. dollar, Mexican pesos challenging some pretty key resistance. Remember, we have NAFTA negotiations that are ongoing. Looks like everything's been pushed back. I don't think we're going to make the soft target of tomorrow. So there's that. And then the U.S. dollar, Norwegian krona is bouncing around, not really doing a whole lot, but it could break higher, especially if the market gets a little nervous about what's happening in Europe. And U.S. dollar, Swedish krona had a nice bullish bounce off of the breakout point, but it's not reciprocating the same way the euro is. As the euro hits new lows, the dollar Swiss isn't hitting new highs. So and last but not least, here's the dollar index. The dollar index is right up against the 78% retracement. Big confluence in the dollar index at the 38% retracement and the 88% retracement. So it's an 88% retracement of the November highs to lows, and then a 38% retracement of the 2017 highs to lows. So that all comes in around 97, 94 and a quarter, and I think that's where we're ultimately going, at least in this leg higher that we're seeing in the dollar right now. As we search new highs, I think we're probably going to go right up here to, and there's some horizontal resistance. I think that's where we're heading. We're heading in the near term. So with that being said, I'm going to pass it over to my colleague Steve and Stelios. I think I heard Stelios as well.
You heard my daughters.
I did. I knew I heard somebody. Good morning, Stelios. How are you?
Hey, I'm very well, thank you. Very well.
Good morning, Blake.
Hey, good morning, Steve. How you doing?
I'm trying my best.
All right, hang in there, buddy.
Did you get any more sleep yesterday?
I actually went to sleep a little earlier last night, which I slept like a baby, so it's good. Thanks for asking.
Good to hear.
Yeah, so hey, Stelios, what do you got to say about Italy this morning?
Well, this is a interesting development. You know, we're talking about this in the chat room, and we're saying that if there's any kind of debt relief in Italy, there's going to be half the eurozone countries queuing up to do the same. You know, it's like I don't know if this is doable or to what extent and what kind of precedent this would set. So. I don't know what to make of it.
No chance in a million.
Well, I wouldn't say in a million, but I think it's very unlikely, very, very unlikely.
Having seen, how Eurozone has handled, such issues, requests so far, etc. I mean, I think the chances are extremely low, and they're definitely zero until or unless we get to another financial crisis. In which case, then the benefits of doing something like that might seriously outweigh the risks, which, as you indirectly mentioned, the main risk in this case is what we call moral hazard, right?
Yeah, absolutely. And you're right. There has to be an event for this to happen. You know, this is a new Italian government, or potentially new Italian government, trying to stir things up a little bit, because they're gonna they obviously want to make an impression. But like you said, if there's no big trigger for this or reason for it, it's never gonna happen. So if there's another crisis, yes. But if not, I agree. It's very low. I mean, again, I wouldn't say 1 in a million, but I think it's an extremely low chance of this happening.
And by the way, for those that don't know, Italy is the third. Is it the third biggest economy in the Eurozone? Am I right?
I think it's fourth. It's Germany, then UK and France, and then Italy, right? I think UK and France are the same size.
He was talking about not the UK.
Dimitri's saying that Italy is the new Greece, so you guys have to move.
But either way, Stephen, by next year it's going to be the third biggest economy, right, of the EU, because the UK is leaving.
No, I said Eurozone, Stelio.
You said Eurozone. You're absolutely right. Yes, you're right.
Hey guys, we got data coming out in a few minutes or in a few seconds.
Building permits, all right. Housing start, building permits, right?
And here we go.
Kick some FX butt, Blake.
Okay,
will do.
I'm monitoring again.
We have some minor Canadian data as well, but really it's all about the US. Building permits, housing starts, industrial production.
Okay, we're just a few seconds away, so let's see the data first, and then we can talk a couple of minutes more about Italy, because I think it's a very interesting subject, and definitely in the long term can affect the Eurozone economy in Euro.
Some data is out early. Building permits beat, housing starts missed by probably equal amounts. Canadian data.
So far, judging from USD yen, Canadian manufacturing sales 1.4 versus 0.9. So that's quite a strong
and
beat.
the revision as well higher. So that's a good beat.
Yeah, let's have a look. Let's have a look at the USD CAD then. Okay, I wouldn't really say that USD CAD is showing any big response either. Let's go down to a 1 hour chart. Nah, nothing really. If you see, I mean, even the hourly candle is an inside candle. So basically, market doesn't seem to be about to move from the data. So let's finish up our conversation with Italy, because then we have some interesting chart to watch. For those that don't know, the problem why, Coach, you mentioned that Italy is the new Greece. Unfortunately for the European Union and the Eurozone, that's not the case. And it's not the case for the following reason. Greece had by far the worst, and still has by far the worst problem with debt and the weak economy, etc. But it's still a very small country that the nominal amount of debt is very, very small, right? I mean, it's 300 and something billion euros. Italy, for those that don't know, has 2.3 trillion of outstanding debt. Am I right, Stelios, on the number?
I remember it was over 2 trillion. I can't say exactly, but I think you're right. But we will.
I think, yeah, I think it's 2.3 trillion. So that means that, you know, if something comes up with Italy, you know, the situation is a lot worse, because it's not a little
right,
matter.
By the way. You're right, by the way. It's exactly 2.3 trillion. Well done. Good memory.
Thank you. Actually, last time I checked it, it was like 2.20 something. So I was guessing that it's about 2.3. So I was spot on, as it seems.
How about France? France will be next after Italy.
France has serious issues as well, but they're slower brewing. I mean, they're slower. I don't think that France is going to be in the spotlight, you know, in the very near term. I mean, Italy, when we get to the next recession, and I'm talking about a global recession, which, as we've talked about multiple times, it shouldn't take more than a couple of years. I mean, this is already the second longest business cycle that we've had, and sooner rather than later, we should probably move to, you know, to a recession. Let's hope that it's just going to be a recession, and let's hope that the economies are not going to implode once again, and then we're going to have to give it some kind of a fancy name, like we had, you know, the Great Depression, and we named the 2008 the Great Recession. So let's hope that we won't have to give it a special name, but even a normal recession is definitely in the cards. I mean, this is the natural evolution of a business cycle. It's like the waves in the sea. You know, you have up, you have down, and you know that's how it's supposed to be. So during the next recession, especially if it's a severe one, definitely Italy, one way or another, is going to come in the spotlight, especially given the fact that Italy has kept producing one weak government after the next. And now we're seeing that it's a very populist government, and we know very well that populist governments stay away, refrain from doing any serious reforms. And what Italy needs, you know, most of all, is reforms. Anything else to add on that, Stelio, before we see some starts?
No, I think you described the situation perfectly, and it's exactly like you say. You know, we've seen it in practice here in Greece. You know, populist governments is you know a very bad thing for countries which are in need of reform. So you're absolutely right, and you know, unless something changes materially in what this new government is gonna you know attempt to do, then you know I personally think Italy is in trouble. But we'll see what happens.
Okay. So let's have a look at the charts. Dale, you'll have to help me a little bit because I was in a meeting. Tell me what Blake talked about, because unfortunately I couldn't be here soon, so I don't go over the same. Although I'm pretty sure that he hasn't talked about some crosses, and you know the crosses I think are the most interesting today. With the exception, what I'm watching here is the very, very nice rejection in the euro yen from the retest of the 200 EMA. I'm still short half a position here, and as I've said, my ultimate target is at 129, especially if 129 breaks to the downside. I think there's going to be a lot more downside coming here. So this is one of the charts I'm looking for. On the other hand, Euro USD is currently testing the 78.6. So keep in mind, this is a fib level. Obviously, the fact that on a daily closing basis, we never managed to penetrate this 119.30 zone to the upside is something to consider. But if you remember, I said a couple of days ago that I consider even a push to new highs for the DXY, perhaps the point at which we're going to see some kind of a deeper correction lower. So I'm monitoring here the 78.6. We're about to test also in the DXY. I wouldn't consider it impossible if we saw anywhere between here and the 38.2 of the whole move from the 2017 high. If we see some kind of a deeper correction, to then buy into it. So I wouldn't be betting on dollar strength in the short term. I think that in the near term it might remain being strong, but in the short term I think we should see some deeper correction that would give some better levels to be buying the dollar. So in essence, what I'm trying to say here is that I wouldn't be chasing Euro USD down here. I wouldn't be chasing the pound, which is also nearing the 38.2 from the post-Brexit low. I wouldn't be chasing the pound here. Obviously, it remains bearish, but I do think that we are probably closer to a stronger pullback that I'm looking forward to sell than anything else. So I would advise against chasing the dollar. Now,
Steve, just to add to that,
yes,
we should probably mention the DSI, which on the dollar is extremely bullish. Let me check it. I have it here. So DSI on the dollar index is 91 as of yesterday, and with today's rally, it's probably going to be higher. And
yeah, which is a near extreme reading. Yeah.
Yes, and the euro is 10. And with today's sell-off, it's probably going to be single digits, and and sterling is 22. So the dollar is becoming quite stretched in terms of the sentiment.
In the short term, yes, absolutely.
In the short term, yeah. In the short term.
Yeah, in the short term, absolutely. So I do think that people shouldn't be chasing it here.
And also just to mention gold and silver at 10 as well each. So a lot of readings near extremes at the moment.
I totally agree. To be honest, I think this is the point that gold is going to prove. If this is just a stop run that we got below 1300, or it's something more important, we definitely broke through the triple confluence of supports at 1300, 1303. We're currently testing the 61.8 of the last move higher. Definitely that is a bearish development. Somebody can still interpret this perhaps as a channel instead of a triangle, but even if you do that, most probably you see that it's breaking lower as well today. So I would be very careful here. The fact though that silver hasn't yet posted like a major bearish break is something to consider. So silver is not confirming yet. The other metals are not confirming yet as well, like copper and palladium. So I remain sidelined anyhow. I had made very clear that I would be interested in buying a breakout to the upside in gold, but I wouldn't be selling a breakdown simply because my macro thesis is that eventually both the metals are going to be moving to the upside. So I would feel much more comfortable buying bullish breakouts than selling them due to technical breakouts. I'm not saying that they cannot produce follow through, and probably they will, but I would rather, especially in metals, I would rather have more long-term positions, and that, as I said, would be best for me. I would feel much better if they aligned with my macro thesis. That's why I'm not going to be selling them. Now, having to do with other commodity currencies like the Aussie is still holding above the low, definitely remains very, very heavy. We're seeing once again some RSI divergence, but the previous time we had RSI divergence, it was good enough just for a little bounce. In any case, 76.40, a very critical level. As long as we remain below that, I have no reason to advocate, for somebody to be buying it. Kiwi, we've talked about this horizontal zone multiple times. I mean, if we do close below it, I've said it, since weeks ago, if we do close below it, I think this is going to be a major bearish development. So far, it's trying to hold this zone. Even if we rebound, I would be monitoring the 69.70, 69.80 zone as a zone of possible resistance. RSI definitely overbought, so I'm saying oversold. Sorry, so I'm saying that to make it clear that I would be looking to short strength and not trying to buy the bottom, right? So especially in these currencies, and I want to be clear about that. Now let's have a look at the crosses, because I think that the crosses, we haven't had a look at them in 2-3 days. So I think they are both the euro crosses and the pound crosses are quite interesting, because first of all, euros is breaking below this horizontal zone. I said that if actually this happens, we're going at least down to 155.80. I actually got triggered, have a position today like 30 pips above here, and I'm looking to ride it to at least this 156 area, if not lower from there. Euro Kiwi, on the other hand, we got a perfect rejection, one more perfect rejection from this ascending channel. And actually, if you see on a daily basis, this is a very nice evening star formation right on the confluence of resistances. It was the resistance of this, the trend line resistance of this ascending channel, and at the same time, the 78.6 of that move lower. As long as this area holds, why not even a move down to the bottom of this channel, or even lower to produce one more leg to the downside? So like an ABC or whatever else we can interpret it when we get to that. So Euro Kiwi also looks good to the downside, at least in the short term. Having to do with pound crosses, pound Aussie, we got that nice rebound. It got a perfect rejection from the previous ranges support that acted as a resistance. It seems heavy since then. As I've said, this confluence of supports at 179.40, 179.50, it's very important. If we do break below it, I think that we will extend to at least 176.60. I'm probably going to try to get involved with that as well. And pound Kiwi is looking much better, but still, I'm viewing this as a possible ascending wedge. And if we do get a confirmed break below this wedge's support, I do think that we're going to get some follow through, in which case I think that we should be looking to 190.50 for the first area of support. So, quite lower from the breakout point. I think this can prove to be a nice trading opportunity as well. Now, yesterday we got definitely some risk off in the stock markets. We got a nice evening star formation in the S&P, but to be honest, I want to see this confluence of supports at 26.90, this broken descending trend line support resistance, if it's going to act like support. It was also a horizontal area of support resistance. So in my opinion, okay, very nice reversal yesterday, but does that confirm that we're actually going straight down from here? Absolutely not. I think the signals are still mixed and we need to remain patient. I will probably attempt to buy it if I do see a nice reaction from there, to be honest. So I still give it a little bit of a higher chance that we might resume to the upside. IWM, a very nice rejection from the confluence of the previous all-time high and this descending trend line resistance. This is also an interesting chart. I mean, technically speaking, quite clean. FTSE approaching the all-time highs. As I said, I expect to see in the short term, I expect to see some kind of a rebound in the cable. So I expect some short-term dollar weakness. Perhaps that will also be the catalyst for some type of a pullback, at least towards the 75, 85 area in the FTSE, if not a little bit lower. Until then, it remains strong. The DAX has also established itself above this 12,900 area of resistance, now acting support. It was previously support as well and resistance. So, it still looks good. And obviously Euro USD, being on the weak side is helping the index stay afloat. So I think that covers more or less a good outlook on where we stand with stocks. And another, I wanted us to have a look at the bonds before I go to questions. So I need to reiterate here, and I've said multiple times, I said it that I didn't expect a rebound in the treasuries. They still looked heavy, and as long as that 120 13 area was holding, I thought it would push to new lows. That's exactly what happened. You can see this remains a very bearish formation, right? Every single time we reach some type of a resistance, we get rejected. And to be honest, I mean, we've started running out of downside targets. I mean, we need to go back to the chart to locate the next downside target, which was that low at 118. It was the low that we had in 2011. So the 2011 low, it was at 118. So that's the next downside target. And if we have a look at the bonds as well, bonds remain heavy. But as I've said many times, since the price action in the bonds in the medium to long term has been quite more clearly corrective, I think that the preferred instrument among the two of them to be short is definitely the treasuries and not the bonds, right? Because as you see, the bond remains within a downsloping consolidation, definitely heavy. So it remains, let's say, bearish, but not in an impulsive manner, in a corrective manner. Now, in the short term, I'm tracking this descending channel. I mean, we had a nice ascent in this ascending channel. I see this as a three-wave move. So far, we have a three-wave move to the downside as well. So some kind of a consolidation in play here. We can ask Greg to give us his point of view next time he's here. I'm guessing that might even be tomorrow. So I think that's a rough overview of what I had to say. Let's go through some questions. Didn't Blake say Citibank looking for 112 in USD yen? Okay, let's have a look at the USD yen, and let me tell you here that I don't know about 112, but I can tell you one thing for sure is that the USD yen has been holding this ascending channel. I have to say though here that you can see we've already started displaying some signs of upside momentum loss. Here it is. You can see that the RSI is already diverging. That doesn't mean that we can't push higher from here, but I'm taking into account this RSI divergence. Anyhow, as long as this ascending channel is holding, the next upside target is at 110.87. And if we actually manage to break through that, I would be looking for this descending trend line to act as resistance. That currently passes a little bit higher from 112. So I wouldn't say it's impossible. I mean, definitely not impossible, right? We still have some distance from that though, and I'm definitely not buying the USD yen because I'm still not convinced of the nature of this move higher. I would want to see a pullback from this move higher, judge what kind of structure that has, to then have a bigger, higher conviction of what's happening. At what point is this euro move a real change in trend? Jason is asking, and that's a very good question, actually. In my opinion, we've already broken below some very important levels, so the chances have definitely increased. I would say that the next critical level is this low at 115.50. If we do break below that as well, I think that the chances that we're headed a lot lower are very, very, very much increased. Okay. Now, I do not believe that we're going to get to that point, straightforward from here. I do believe that we're going to see a larger rebound from there. So for me, the most important element, the most important tell will be what kind of a rebound are we going to get when we get a rebound, which, as I said, I think it's going to be rather soon. If the rebound is slow, it's overlapping, it's corrective in nature, I would be looking for at least one more move down to that area, like between 114.50, which was a major breakout zone. You can see it from here. It was a breakout from this confluence of resistances back then in the summer of 2017, or this low at 115.50. So I do think that if we rebound from here in a corrective manner, we're headed anywhere between these two levels, which are 100 pips distant from each other. Now, if we do see some real strength going up from here, that's a different story. I mean, there is still the chance that Euro-USD will be remaining bullish. As I said, a pullback, I said it for USD yen as well, a pullback is going to be very telling of what the market wants to do next. Okay, we have a question about Euro Swiss. As you see, a major move to the downside, not by accident, simply because the jitters that we have for Italy at the moment definitely create some safe haven flows towards the Swiss franc. If you remember, I was very clear about it since months ago that when we get to 120, 120 is going to be a very powerful level for this. It looked like initially, since we had a very tight consolidation near 120, that if things kept being, from a macro perspective, helpful for risk-on conditions in the Eurozone, it looked like this consolidation could break to the upside. And if that happened, we would have seen a big follow-through, because as you understand, there are several positions that are to be triggered above 120 or even stop losses. But since we never managed to achieve such a break, and we got some reason now for safe haven flows to go to the Swiss franc, we're seeing a nice rejection from there. I would be looking lower towards the 117 area to begin with. So that's what I think. Very nice technical rejection. But okay. Hello, I need your advice on Euro USD. I've gone long around 119.30 and hedged my position. Until now, I have opened and closed my head several times. I just can't find a decent low. I see divergence between two recent lows on 1 hour chart, but I think Euro USD going to go around 115. Yeah, that's what I was saying now, that yes, it has the potential to go anywhere between 114.50 and 115.15. Now, my opinion is, and this is not to advocate that you should hold on to your position, because you know best what was your initial target. So what is the risk you can afford? My opinion is that it's not going to be easy for the euro to go there before first rebounding to the upside. So I do think that there is a possibility, a good possibility in my mind, but as I'm saying, this is not a trading advice. You know what you were thinking when you opened your position, so you have to take the decision for yourself. Is that there is a good chance that you're going to find yourself being in the money again, even if we are to go there before we go there. So the market might give you the opportunity to actually close your position, without incurring a loss. But as I said, you open your trade, you know your risk management, and you know what you can afford losing, and what's your trading plan on that. What's the likely target for the month or week? Okay, there's a question about the Nifty. Let's have a look at it. Okay, Nifty, very nice response from the 78.6. Moving lower from here, looks a little bit heavy, but once again, I'm going to say, as long as it remains above 10,600, I think that it looks okay. Now, if we do break below 10,600 again, I would be careful. As long as we remain above it, I think that, it has a decent chance of remaining bullish. So, bull bear line, in my opinion, remains exactly here. So this is the level to watch. They could have saved Greece from the beginning and avoid all the mess on the markets. Would have been cheaper probably. Yeah, Kerem, this is a good point, but and I'm Greek, so why not? But I can tell you two things for sure. I mean, from a personal perspective, obviously that would have sounded like an appealing case, right? But being objective, if I was the Eurozone, I would have probably done the same, because the point is not saving somebody, is making an example out of them, because Greece did not go bankrupt in accident. It wasn't unlucky. It has a very flawed economy. It's a very flawed and a very closed economy. It's in need. It was in need of desperate reforms, and it still needs a lot of reforms. And just by saving somebody that is still following practices that, mathematically speaking, will bring them to the brink of collapse once again, doesn't help anybody, right? You just create moral hazard, and the same thing is bound to happen once again. So I do think that the proper thing to do in this case is exactly what they did, which means give it enough to stay afloat, but have it go through the pain of actually realizing what went wrong, changing the model of the economy, and making it viable once again. Now, once the economy is viable, you can then consider giving it some more debt relief, knowing that at least it's not going to go to waste. Unfortunately, I have to say that this is not the case with Greece yet, and politicians are have obviously not learned the lesson. So, despite being Greek, I would have to say that I wouldn't be throwing any good money to Greece yet, not at all. Italy is the new Greece. Come on, Stelios, give us your Italian accent, says Ziggy Stelio.
Yeah, I don't know. I don't know. I am a Greek.
I'm Mario Draghi. I'm glad to see the euro fall.
But I was thinking what you just said, Steve, about Greece, and the interesting thing is that there was no trigger like with other countries for the crisis. There was no housing market implosion or anything like that. Although the housing market did eventually fall after.
Of course, after the economy, yeah.
I thought it was a euro shortage in Uzo.
No? Did we lose you? Did you mute yourself by mistake?
I did, yes. Sorry, yeah. I was going to say that I think modern Greece is going to be a textbook example of to teach to to students in the future how you can mismanage a country. It was just horrible the way it was run. So
how you can mismanage? I mean, to the maximum extent, a country.
Yeah.
Watch America now. It could end up being a test case too.
To be honest, I'm not at all optimistic about the future of the US. I'm afraid, Dale. I mean, it's also on a slow path to
Rome.
Yeah, it is. It is, and it seems that none of the politicians wants to do the right thing in advance to avoid maximum pain in the future. So obviously, US is nowhere near the point that things will go very bad, but it's in a clear path towards that point. And I really hope that, somebody is bold enough to do the right thing, as soon as possible, because the alternative is going to be very bad, not only for the US, but globally, as you know very well.
Oh, sure.
So, yeah.
This will be ground zero.
More or less, yes. Yeah. And I don't know how far away it is, but
anyway, have you guys found a place for me in Greece yet? So Blake and I can, run away.
Absolutely, absolutely.
Hide out in a place that's already been leveled, so we could watch the U.S. on TV instead of being in the middle of it.
Something tells me that Greece is gonna implode, long before the U.S. does.
Yeah, but it's already at a 78.6 retracement.
I'm actually afraid that it's headed to the 161.8 extension.
All right, hey, thank you guys. Raksha's here, so I think I'll get started on our interview today.
Okay.
And all right, thank you guys. Thank you, Stel. Thanks for sending the charts to me, and Steve for making them up for me, and Raksha, looking forward to meeting you and hearing your voice. And I'm now going to make you the presenter. So looking forward to hearing you and seeing your platform, so we know what you are staring at every morning, every afternoon, every evening, and hope you sleep. Hi, Raksha. Just waiting. Let's see.
Hi, Dale.
I hear you. Okay.
Yeah, how are you doing?
Good. So nice to meet you, Raksha. Thank you so much for taking the time and having the courage to be interviewed. You know, a lot of people fear public speaking more than death. So
I know that.
it's great to have you with us. Did you want to share your screen with us? You could choose which screen to share. Right now, I'm just seeing the connected GoToWebinar up on my screen.
I hope it's visible to you right now.
Okay. You just select, yeah, just so there we go. Okay, so I'm looking at the ITC.
Yes, that's ITC, which we were actually trading by this morning.
Okay.
So
Before we get to that though, Raksha, why don't you tell us how you got involved in this industry? Who were your mentors? How did it happen that you became a trader?
actually, I am not from this field at all. I run a magazine, international magazine, and my husband was into this hedge fund company. He used to work for a company named Carvey here. So
Cargill?
Carvey.
Okay. All right.
Okay. So I used to watch him and just used to be amazed how this thing is going on. I mean, like, how can you predict how it's going up? How can you predict it's going down and all? So that interest built me up by watching my husband.
Okay.
And slowly and gradually, I started learning what exactly it is, started reading books, the normal books, which we actually have in the market nowadays. And then my husband introduced me to the trend lines and the Fibonacci and everything. And then slowly and gradually, when I start to understand this, I got to know it's so much interesting.
Okay.
And here
wow,
I am right now.
you were fortunate to have it in the family. Someone who already had trading experience. You know what kind of journey most people have. They search the internet and they don't know who's credible or who's you know, a crook. And so you were very fortunate to have a mentor. Do you guys ever make trading decisions together?
Yes. Now, actually, we do.
Oh, wow.
Now
Okay.
I'm completely into this. Me and my husband both are just taking care of this right now.
Okay. All right. And it doesn't affect your marriage during drawdowns?
No, because
I told you.
No, not at all.
All right.
Actually, it's the other way around. When it's like that way, the market is crashing or we are getting into losses and something like that. It's the other way around. I tell him, "Oh, it's okay, baby. It's okay. It happens. We made a mistake at that point," and he understands. And if it's my fault, then he tells me, "Okay, see, you've done the mistake at this point." So it's like it's more than being. It's like getting closer together when the market is downfalling. So it's the other way around of this thing.
Wow. You know, so that's, so you know what? It sounds like it even strengthened your marriage, where most people would have been in conflict. You guys support each other when things aren't going well. So you have a support system, a mentor. Sounds like your husband was a good catch. What do you think?
Yes, exactly.
He probably thinks so too, and I bet he thinks you are too, Raksha. So
I really think so.
All right,
and
so
it's like, please, tell me.
No, go ahead.
What do you want me to say? Because it's my first time, and I'm still like with my cold hands and all. So you just tell me when to start and how to start.
Like I told you, I could go anywhere you want to go with different instruments to cover it. So you want to start with the dollar and tell us what you're seeing?
Okay.
Or did you want to go to that initial chart you had up there that you traded
ITC,
today?
it's nothing much here in ITC actually. It's not that much, which I can
What
actually
is
tell you.
ITC? What is
ITC
ITC?
is a stock name in Nifty 50. Nifty 50 is the
Okay.
index here. Okay, so it's
All right.
ITC is the name of a company. So it's
All
a
right.
chart, and we were actually trading like this, and it would be a little bit messy. You can see here.
Right.
That was a trade in the morning. So it's actually my husband's setup. So it's not mine.
Okay.
I was looking into Forex trades in the morning. So what I
All
was looking at DXY in the weekly chart was it's about to give a good rally till this point.
Wow,
This
look at your objectives.
-7. Yes.
Yeah.
So
Nice.
that's the one thing which I have. And on the counterpart, like we take trades on crude and gold. So depending on the DAX, which way DAX is going. So that is the main
Okay.
first thing which we do exactly. And the normal trend lines and Fibonacci ratios, and these the pink lines which you can see here. These are the support and resistance levels, as per you can see that. So accordingly, so accordingly the DAX is right now. I can see I have put it here. So till now it has given us good rally here till this point. So now I'm looking forward for this to reach this level. I can't see this. Just a second. Yeah, like 97.
Yeah.
Okay.
Yeah, you know, I'd heard that number bandied about by some dollar bulls looking for this counter trend move. So, you know, great look, and that'll probably give us what, like a 115 euro or lower. So interesting look, and I understand RSI what you're using. What's the indicator underneath the RSI with all those different colored lines?
This is ADX. It will show the strength of the trend.
I see. Okay.
Okay. So if it is like this black dotted line you can see here.
Yes.
That's 25. That's the neutral level. Below this, if this black line is the ADX, below this there is no trend. It's a sideways. Market is sideways. And above 25 is a strong trend. Either it can go downwards or upwards. So that's how I look for this. And RSI, I look majorly for the divergence mostly. As we can see here now in DAX only. See, we have higher highs here.
Yes.
But we are having lower lows in RSI.
Yes.
Okay, so that's the divergence which I actually majorly I look for the divergence. So here, and already it's 2017 and 16 high point also. So I would look for some downfall from this point because it has been confirmed by RSI, the divergence in RSI.
Right. Okay, so I understand that. I've renamed RSI.
Yes.
Real simple indicator.
Yes, exactly.
Yeah. Okay. So, what's the pink and green lines under the ADX?
This is the positive directional index, and this is negative directional index. Positive is the green one. That means you're going to have bullish trend. When green is above the red one, you're going to have a bullish trend. As you can see, the cross here.
Yes.
Okay. And here we started the bullish trend.
Nice.
Like this. Okay. And when you have this negative one above the positive one, it is the bearish trend.
What a nice indicator.
Yeah, it's very simple and it's out of everything. I mean, rather than going for more of the bulk of indicators, I strongly believe in only these two ones. Sometimes I use MACD also, but that in intraday trading when I'm doing in Nifty 50.
Okay.
That will show the fast trend change, either it's going bullish or bearish.
Do you guys live in India?
Yes, India, Hyderabad, if you have heard about the name.
Okay. Can I just ask you what it was like for you when Modi outlawed some of the different denomination of currencies last year? Did you feel the effect?
Yes, a grand effect was there. Actually, I'm not into politics that much. Yeah, as I told you earlier, I'm the girl behind the laptop screen always.
Right.
So the thing is, yes, there was a huge effect on this thing. It is not as success here as it has been said. But yes, many of the things are good. Many good points are also being taken care of during this, like the corruption and everything has been gone down because of this the discontinuation of the denominations of thousands and 500 notes.
Did that move? Yeah, I don't want to talk politics either. I'm really just economically. Did that force a lot of your countrymen into things like crypto because of that?
Crypto is still not valid, legal in India right now.
It's illegal in?
No, it's not. It's not being accepted here, the cryptocurrency.
Okay. All right. So good. We don't have to cover that. So you did it makes my head explode, Raksha. So you mentioned that you and your husband also take a look at gold, crude, and DAX. So I was looking for this washout in gold under 1,300. I thought we had to take those bulls out. I'm wondering if you have as clean of a view for what you might be looking for targets on the downside in gold, if you have any.
Gold, just let me check funds, because gold my husband is taking care of. I'm taking care of crude right now.
Okay, so we can look at, crude's fine.
I'm looking for crude right now, so I'll just show you that. And I'll show you a very interesting thing here in crude.
So your husband takes care of the gold, and I would expect that you take care of the diamonds.
Yes. Always. They are the girl's best friends, you know.
Yes. So that's why I get it.
Here's the weekly chart of crude. Okay. I have been following crude since a long time, since like last year, November, as you can see here, the pointer.
Right.
I was looking like at this point. What happening here is I am much more into, one thing I wanted to tell you, that I am not at all fundamental trader. I know nothing about it. My husband takes care of it, and I am only 100% technical one. Okay. So here what I saw in the monthly chart, I'll show you the monthly one. Here I saw was an harmonized pattern in monthly chart of crude. Okay. Here. You know about the harmonized pattern, right?
Why don't you explain it to our viewers?
Yes, harmonized pattern. If I simplify it, if I want to simplify that in market there are certain kinds of pattern which tend to repeat itself again and again. Okay, they are harmonized. Like suppose from this point, you can see the pointer from 27 to 52. Okay. I'll just give you one good example, because I was watching it, and I think anyone who is watching this video will be amazed to see that, because I found myself in that state. See, in 11 bars in 336 days, that's the measurement of this particular trend. Okay, it reached till this level. Okay, 55, as you can see the price to the right side.
Yes.
Then it went down for some retracement, okay, and then it went up. If I again calculate this, just a second.
In time.
Yeah. Yes, in time and bars. If I again calculate this, it nearly comes like 11 bars in 334 days.
Interesting.
So that's the harmonized pattern. Means in not exactly, but near about in the same time frame, in the same bar, and the same price level as being from this place,
right,
to this place, the movement will be same.
Did you discover this on your own, just self-taught, or
no, it's not.
It's kind of like GAN, time's more important.
It's more than price. Yes, it's a harmonized Gartley patterns. It's not Gartley. Gartley.
Okay, so that's excellent, and you probably saw even before the divergence at the low, since you're an RSI person.
Yes.
Okay, so now you're saying that we might be approaching in time, not necessarily in price. There could be some more left. where we could
Yes.
stall out, this rally could stall out and then pull back to your checkered flag? Is that
Yes,
what the
yes.
flag is there? Okay.
Yes, yes.
So that comes in where, around 62-ish?
It's around, yes, it's around, can you see the pivot line here?
Yes.
This 61.71 is the pivot line
Okay.
here. At
Okay.
least like this. See, how the Fibonacci pattern works is, it's the ABCD pattern, which I'm telling you right now. It's A leg, then it's
Right.
B leg, it's A point, B point, C point, and then D point. That's AB equals to CB. That's the pattern
Okay.
name. How does it work is, when there is a reversal candle at the top of this, okay, then we will calculate this with the Fibonacci ratio like this. Suppose it ends here.
Where did you learn harmonics?
As I told you, I was going for researches online. I got many books, ebooks, Kindle, and whatever I can get my hands on.
Because
So
I'm going to be interviewed by one of the pioneers in harmonic patterns. Larry Pesavento wrote "Trade What You See." So yeah, he was one of the first to talk about Gartley's and so forth. That might be something to add to your library. But okay, so we're looking for a potential pullback in
Yes.
crude. And I
Yes.
work with another harmonic guy. Andre is with us, and Andre is excellent in harmonics. He just reminded me when I mentioned Larry. So why don't you tell us where you're at in DAX? Because, you know, we had, you know, the tone change in world bourses in February, and we've been in huge trading ranges. So I'm wondering where your head is at on the DAX, or does your husband
The
take care of
DAX.
the DAX too?
Yes, DAX is like this right now here. Okay, see, I have put a trend line here. The black one trend line will be the weekly ones. Okay.
Okay, this is the dollar, not the DAX.
Oh, sorry.
That's okay.
Yes, I got confused with that.
I already know where the dollar's going now, and you just,
Yeah.
you know, gave me confirmation for a great long-term target in the dollar. I appreciate it. Okay,
Thank
so why don't we go to the DAX? Okay, here. That's
DAX
crude.
I'm not having. I'm really afraid, so I'm not having DAX with me right now.
Oh, okay. All
That's
right.
in my laptop, and my husband is carrying that right now. He's here in the town.
Okay. Okay. Do you guys have any kind of business model? Do you manage money? Do you teach people, or you guys mainly just trade for yourselves?
No, we just trade for ourselves. We're having our own hedge fund company also, so we're taking care of our clients' portfolio also.
Okay.
And no, we don't teach people right till now. We are not, because I'm still a learner. It would be bad if I going out and teaching people. So
Right.
let me be first better person to at least share my knowledge with anyone. When I think that I am okay, that this is the point, I can actually share my knowledge properly and perfectly to some people, so that they should not make any kind of losses or mistakes in the market. Because market is something, if you don't understand it properly, it'll eat you up badly. So that's my point of view in this sense.
Yes. So the hedge fund that you run, is it an open hedge fund where people could get involved in it, or is it closed? And do you have minimums for participation?
No, we have closed one right now, and we have only few clients with us. Yeah, we have a few clients with us, because it's right now only me and my husband are taking care of it. So we want to keep it simple.
What's the most important lesson you've learned in your trading career that you could pass on to listeners and viewers today?
The most important, I'll emphasize like with a lot of weight, is the stop losses.
Okay.
Without stop loss, never enter a trade. Never ever. That's the first thing. I have in the starting days of my trading, I have swiped off lots and lots of dollars from my account, just not because I forgot to put the stop loss there. So since that day, I always make sure I have a stop loss before entering into my trade, first thing. Second thing, the stop loss should never actually challenge your capital amount. It should be at least like not more than 2 to 5% of your capital of the trade which you're taking right now. That's the important thing. Even if if the stop loss hits, you should be having that much amount of money in your hand, the capital in your hand, so you can cover it back with a good trade, the correct one.
Right.
So the risk and reward ratio and the stop loss are the two things which I take care of.
What's your minimum? What's your minimum R to R that you'll take? Do you need at least 3 to 1, 2 to 1, 4 to 1?
We try to get it at least like 3 to 1 for sure.
Okay. Okay. So if you don't see the potential of a trade being at least 3 to 1, you just forget about it.
No, we just leave it. Yes. We leave it, and we just obviously we track it for sure. So where is it going? It'll give us more experience. You know, it'll teach us rather while if we take the trade, it's correct or not. So that's the two thing. Even if we miss the trade, we get the knowledge.
Okay. And okay, yeah, there's always another trade. Do you have a philosophy for taking partial profits on a position?
Yes, we do that. Once I always have, mostly in the most of the trade, I have two targets, target 1, target 2, which I have as per the Fibonacci ratios or as per the trend lines and all. I have that, and when it reaches the first target, I always put my SL to the entry level. So in any case, if it goes down, my equity will be safe. Yes. That's
great money management. So you end up, the worst case scenario is you make money.
Yes,
and take the pressure off. Raksha,
yes, exactly.
You did a great job today.
Thank you so much.
And you gave me a nice dollar target. I'll be licking my chops at 97 to start fading the dollar. And what a great testimonial that husband and wife that, you know, a lot of families fight over, you know, how you put the toilet paper on, that you guys can that you guys can get along making financial decisions and and support each other during the tough times. You're both very blessed, and what a great example of a trading team that you and your husband are. And you are now my trading warrior sister, Raksha. Thank you so much.
Thank you so much, Dale. Thank you so much for inviting me here.
I really enjoyed meeting you and talking to you, and you're exactly what I expected. You're a pro. So thank you very much, Raksha.
Thank you, Dale. And yeah, please, Dale, go on.
Okay, you're very welcome. Everyone, that's Raksha, and you could follow her. Her Twitter handle is at RAKZ_27. So she's a must follow now that you've seen her.
Thank you so much.
Yeah, you're very welcome. Okay, everyone, have a great afternoon. Larry's not coming here. I'm going to be on Larry's show in about 7 minutes on TFNN. So everyone, good hunting. And remember, most of all, just like Raksha I know does, don't just count your pips, count your blessings. And again, her Twitter handle is at RAKZ_27. You're welcome, Tom Lano. Thank you, team. See everyone tomorrow for investing.com Thursday. Adios and good hunting. Thanks again, Raksha.
Thanks, Dave. Bye. Take care.
Bye-bye.